Alright guys, welcome back to the channel. So in today's video, we're going to break down the 2024 goals, what stocks I'm picking, what index funds, and where I'm allocating my money. So stay tuned. There's a lot in this video, and I hope you learned something. If you feel like you did, just subscribe, like, and please comment in the section below. So for those of you that use Fidelity, under News and Research, they have a Learn tab, and there's definitely a lot of good resources here if you're still trying to learn how to trade or just get money advice. So under Learn, I was reading under this article the 401k contribution limits for 2022, 2023, and 2024. There has been a change, and let me just show you real quick. In Fidelity's new article, they talk about the 401k contribution limits for 2023 and 2024. So now it's just letting you know how much you can actually save in it per year. So for the new calendar year, 2024, the key takeaways is that 2023, we could only do in our 401ks, 22,500. Now in 2024, they have made this rise to 23,000. So that's additional money that you can be saving. If you're older than 50 years old, then what you can do is you can contribute an additional 7,500 for 2023 and 2024. So if you're at that age, there's definitely something to consider. I'm just going to leave this down here just in case you want to pause the screen and take a look. But it's just showing the 401k contribution limit for 2023 was 22,500. And now it increased all the way up to 23,000. And then if you're 50 years or older, you can add an additional 7,500 in catch-up contributions, they call it. So this raises your employee contribution limit to $30,000 if you're greater than 50 years old. So definitely something to consider if you're trying to save a little bit more money. So this brings me to my first goal of 2024. All right, guys. So when I create my financial plan, I just put it on the Excel spreadsheet at the beginning of the year and I write down my target goals. So the first one is my job offers a 403B. That's a retirement account. And you can do, with the new contribution of 2024, you can do 23,000. So my target goal is to hit the 23,000 in pre-tax dollars. And I always like to set how I'm going to do it, what's the duration of it, and when I'm going to complete the goal. So I'm going to put $5,000 every paycheck until it's maxed out because I want to max this out early. I don't care what the market's doing. I don't care if it's high, if it's low. I just want to get the money in because compounding over time is my goal. So this duration is going to take me 5 paychecks because I'm doing 5,000 a paycheck, and I'm working a lot of overtime to supplement this. So I still have money for real life. Then when am I going to complete the goal? February 22nd. That's the first goal. Now let me just show you where I'm putting this 23,000 so you can see where am I investing it. So it gives you a better idea of where do people put their money when they have it in a retirement account. All right, guys, so at my job, I am able to connect my 403B to Fidelity, so that makes me happy because pretty much all of my money is in Fidelity. So I chose for my 403B to put in FXAIX. This is a low-cost Fidelity S&P 500 index fund. The S&P 500 to me is the king. It's what everybody compares their investments to at the end of the year. And as you can see, my expense ratio here is 0.015%. And I don't want to stick on this too long because I have plenty of videos breaking down the S&P 500. The one thing I want to show you for new investors that are looking on that aren't sure what this is, I just want to show you the top 10 holdings. It's in companies that we are all aware of, the Microsofts, the Apples, the Amazons, the Nvidias, the Google, Facebook, or known as Meta now, and Tesla and Berkshire Hathaway and United Health Group. So it's United States pretty much only at 99% weighted, and it invests in large cap growth like a blend. So it says large cap. All that means is that it invests in companies that have greater than 10 billion in assets. So that's where my retirement is. 100% of the paychecks, that 23,000 this year, is going to go right to this, the S&P 500. And you have to look at your job and what they offer you. But every company usually offers a similar S&P 500 fund. All right, so now here is my second goal for 2024. All right, so at my job, I'm offered a second retirement account. It's called a 457. So some employers will offer this. So I can do 2 401ks pretty much. So that means I can max out up to $46,000 a year away. So my target goal is to get this 23,000 in, and I'm going to do a mix of pre-tax and a mix of post-tax. What this just means is mix of pre-tax is I'm using my gross. It's not going to get taxed. It's going to put the money in the account. Post-tax, I get my paycheck. Let's say I made, I don't know, $1,000, and it takes $200 and puts it into my retirement account. So how am I going to accomplish this? I'm going to start with 2% pre-tax and 5% post-tax. I was actually just looking at my first paycheck in January, and it's already going to be $900 added just with this 2% and 5% because I'm working so much overtime. So we're already getting closer to our goal. So the goal is $23,000. We're going to try to do this over 6 months, and we'll readjust and look at it in April and see where we're at, and we'll adjust the contributions based on that. And the goal, I want to complete this by June. So let me just show you where I'm putting this money so you can see how I'm allocating 2 different 401ks and where I'm putting the funds. All right, so this is my 457. This shows the asset classes. In international funds, I have 7.92%. In the mid cap, I have 12.47%. And then in the large cap, which is S&P 500, is almost 80%. And it just shows it as a nice little graph here where you can look at the circle and it'll show you which funds you're doing. So the mid cap, international, and then the large cap. Now let's go to my investments so you can see. So this first fund, the international, that's almost 8%. This is anything that's outside of the United States. So as you can see, look at the portfolio analysis over here, right over here. U.S. stocks only 0.6, non-U.S. stocks are 99% of this portfolio. So 8% of my money is going into this and invest in companies such as like Taiwan Semiconductors, Nestle, Fidelity Cash Central Fund, and whatever this is. So the way I like to look at it is I want to find a large cap, which it's hitting this blend right here, and it's large giant. So that means they have, billions of dollars in assets, and it's investing the money in anything that's outside of the United States. So if another country is doing really well, I want to be part of that, and I want to have my money allocated towards that. So that's the first 8%. The next allocation, which is 12.47%, is mid-cap stocks, and invest primarily in stocks of mid-sized corporations that are approximately 15% of the 5,000 equity companies within this index fund. So I like that diversity. I like that it has nice, 5,000 companies. They're all small. They're in between that 1.6 billion, but less than 10 billion, which makes them mid-cap. All right, and here is your large cap stocks. This is the S&P 500, just another version because it's in the 457. This invests the largest 5% of the 5,000 domestic equity companies. So basically what it means is that the companies have to have a market cap of greater than 10 billion. When you break this, the fund that I chose, it's just the S&P 500. It's 500 companies that have a greater cap greater than 10 billion, and that's all it is. So similar to FXAIX, which is in the other 401k. All right, guys, so for those of you who've been following the channel, you already have seen this portfolio, so I'm not going to go too detailed with it, but the third goal is to double this. I want to get this account value to 50,000. How am I going to accomplish this? Because right now we're up 3,200. The market's at all-time highs. I'm going to continue my auto investing. Take a look. I'll post the video. I'll attach the video on this. It's the automatic investing because every Monday I buy $160 worth of Hershey's, Realty Income, SEHD, FNILX, and FSPGX, and that's going to help me get to that goal. But I'm going to need to add a little bit more money, and I have it on the Excel spreadsheet for you to see. So for my taxable brokerage account, you guys saw it. It's around like 26,000. It's invested in the FNILX, SEHD, FSPGX, Realty Income, which is O, and then Hershey's, which is HSY. Our goal is to hit 50,000. Currently, right now, we're doing $160 a week into these 5 funds. Recurrent automatic investments, I don't even think about it. That adds up to $640 a month, which is $7,600 every year. So that's a difference of I need to make up $16,000. And this is a very heavy goal. We don't know if we're going to reach this, but we're going to try to continue that. So we're going to continue trying to do that. And if I wanted to, that would have to be $923 every 2 weeks. So we'll have to see how much we're really working to make up this difference. But that's a goal I like to set for myself. And sometimes if it's a little high, that's okay. Because even if I don't get to 50 grand, but I get the account to, let's say, 40 grand, that's still progress. We're still saving. We're in the habit. And that's what's more important, in my opinion. All right, guys. So my fourth goal is going to be my Fidelity Crypto account, which you can see right here. I show the taxable. I show the Fidelity Crypto. Those are the 2 portfolios I always show. And I have Bitcoin and Ethereum. And currently I'm up $1,600 on this. I'm a account total of 50%, which is fantastic. But my goal specifically is to double the investment at $1,500 cost basis. I want to get it to a cost basis of $3,000. And Ethereum, I have $1,750 invested. I want to get that as well up to $3,000. So I want to have 3,000 ETH, 3,000 in Bitcoin. That's my goal for 2024. That's not as much money, but I always want to have some skin in the game when buying this. But I'm not going to make any of these purchases unless Bitcoin goes down to 30,000 and Ethereum has to come down to at least 2,000 for me to start buying more. So I set alerts on it and I'm just waiting. All right, so my fifth goal in my rollover IRA, I've been currently buying T-bills with a 1 month expiration. And my plan is to eventually, when the market pulls back, I'm going to re-enter either into the S&P 500, about 80% of the rollover IRA, and I'm going to buy individual stocks. I just wrote a few down here that I'm looking at, but not going to buy right now. But that's my plan. Let me show you T-bills so you can see what I'm doing with that. So T-bills, what are they? Treasury bills are basically short-term financial instruments that are backed by the U.S. government Department of Treasury. So you can have T-bills that have different maturity periods. The ones I am choosing are only 31 days max because I want to put this money back into the stock market, but the stock market's very high right now. So let me show you on Fidelity, because Fidelity, a good thing that shows right down here is T-bills are sold in denominations ranging from $1,000 for retail investors. So every single T-bill that you buy is worth $1,000. So one T-bill is $1,000. So let's look at the IRA. Let me show you how I'm doing this on Fidelity for those of you that are interested in buying T-bills, because maybe you think the market is overpriced and you want to make a certain percentage. So on the Fidelity main website, what I want you to do is go under News and Research, just highlight over it, and then click on Fixed Income Bonds and CDs. Once you click on that, you're going to get this screen to pop up. Now, the next thing you want to do is go to New Issues, which is right here. And then what you can do is look at down here at Treasury. So you'll see here, Treasury, it'll say 3. Now, it depends what the auction is, but you hit the plus sign. And now it's going to show you what the Treasury bills are and when's the maturity date. So this says United States Treasury Bill 0. And then you can look at the expected yield. Now, what I want you to realize is that although this says 5.33% a year, you have to divide this by 12. So I'm holding this for 1 month at a time, and I'm getting 5.33% divided by 12. So if you had $100,000 invested, and you were getting, let's just make an easy number, 5%, you're going to get $5,000 divided by 12. So that'd be like 70, like probably like $500, whatever it is. So just make sure you're not thinking you're getting every month, you're getting 5.33%. You're getting 1/12 of this because it pays every month. And it shows the maturity date if you were to invest in this one. The one that I'm in, the maturity date is January 23rd of 2024. So after you click on the link where it says United States Treasury Bill, I clicked on the one that says February 15, 2024. The yield is 5.33%. And it just shows you the estimated annual return for a new issue security. I like Treasury bills because they're safe, they're backed by the United States government, and I know I'm getting my money back. So whatever principal you put in, you will get paid the yield. Now remember, 5.33% divided by 12 because it is only being held for 1 month. Now, the one I'm doing, we said, was January 23rd, so this is a later one if you were to do that. But I personally have a good amount of money in this, and I'm going to slowly, every single month when it matures, I'm going to put some money in the S&P 500, maybe buy some stocks. But right now, if the market stays at all-time highs, I'm going to continue this strategy of buying the Treasury bills every single month until we get a nice sale in the market and get like a 10 to 15% drawback. All right, guys, so this is for new investors. I just want you to see why you should be investing your money. So this is the compound interest calculator. And what it does, you put a few numbers in and you can see how much money it'll be worth if you make a certain amount of annual return. So initial investment, we'll use my taxable brokerage account, for example. We'll act like there's $0 in there. But I'm going to put in, remember that I said that $160 every single week, which adds up to $640 every single month. And if I hold those funds for 30 years, so I'm holding them for 30 years, and I'm going to make a 7% return. Be very modest with this. We're going to make 7% annually. And now we're going to compound it, and let's see where it goes. We're going to calculate it, and it's saying in 30 years, you will have $725,000. So let's zoom in on this chart because I want you to see this because this is really important. It's really important you see All your hard work is paying off. So right here, we can see that in, year 2, you are up to already, my total contributions versus future value is $15,000 put in. Because every year we're putting in, over $7,400 a year. But once you get to like year 10, this is where you start really seeing the money. So your total contributions is you put in $76,000 of your own, but because of the 7%, it has grown to already over $106,000. When you get up to year 20, you've invested $153,000, but the future value is doubled already, at $314,000 at 7%. And I'm being very modest with 7% because the market usually does 8 to 10%. And then when you get to year 30, look at the difference there. I will have contributed $230,000, but it'll be worth $725,000. Now let's be a little more aggressive and say we made 10% a year. So we made 10%, and let's calculate it. In 30 years, it'll be up to 1.2 million. If I just average 10% a year, that's your goal. Make 10% a year and have time on your side so you can really compound this. Because what I want you to see is look at let me try to zoom in a little bit just so you can see. So when you get to year 10, I invested $76,000, but it's worth $122,000. When you get to year 20, you invest $153,000 of your total contributions, but it goes up to $439,000. When you get to year 30, you invested $230,000, but the future value of making 10% every single year is $1.2 million. So this is just a great example to show you need to invest your money. You need to put your money in the long-term accounts. You need to put them in good, strong index funds, S&P 500, growth funds, dividends, and just let them ride. Ride the waves, and when the market goes down, just be happy and buy more. So I just want to show you that little table just to give you an example. I just want to show the example of why I'm maxing out 2 401ks. That comes out to basically a monthly contribution of $3,800. And let's say I did it over 25 years and I made 8% a year. So, and it's annually, it's get compounded. I'm going to calculate it. So I should be looking at my retirement. If everything works out well, I make 8% a year, 25 years putting, the $46,000 a year away. If I'm able to do that, I'm looking at 3.3 million. So that's the goal. I'm using time to compound and make money. So that's why I'm putting all this money in the taxable account, the 401ks, the Bitcoin, and just trying to let them value over time. Because when you get to year 10, you can see you invested $456,000 and you made, 8%, $666,000. But when you get to year 20, that's where it really adds up. You invested $912,000, but it's already doubled. The future value, because of 8%, is $2 million. When you get to year 25, you invested $1.1 million, but it's worth $3.3 million at 8% a year. And you're going to have fluctuations, 8% one year, 10%, maybe 5%. It always changes. So I just want you to see why I'm investing this much money, because I'm thinking long-term and let it compound over time. All right, so my final goal for 2024 is my YouTube channel, Trading Simplified. My goal is to get to 2,000 subscribers and eventually monetize this channel. So I want to monetize the channel in 2024 and see how much we can grow this channel. So this is my YouTube channel, Trading Simplified. As you can see on the right side, I'm at 810 subs. And I just want to say thank you to everybody that's subscribed. It definitely means a lot. I love when you comment, share the video. It means a lot to me. Starting to see some momentum here. We're really getting a lot of views in the last 28 days. Now, let me give you some of the funds that I am going to invest in long term. You've seen some of them. I just want to break them down just to make sure. So overall, if you're a new investor and you've never invested money, I would recommend starting with the S&P 500. Now, Fidelity, I brought up 3 of the funds that are all the same. They just have different expense ratios, which we'll go over real quick. But the first fund is FXAIX. The next S&P 500, another version of it is VOO. And another zero expense ratio S&P 500 is FNILX, which is only offered in Fidelity. So as you know, my 403B is all FXAIX, and you can look at the life of the fund was 10.56%, and the expense ratio is 0.015%. Then you have VOO, which you'll say, well, if they're all S&P 500, why do they have different lives of their funds? Well, I looked at the breakdown, the composition of FXAIX, VOO, and FNILX. There's about a 2% difference in the top 10 holdings, where FXAIX is like 27% in the top 10 holdings. VOO is like 29% in the top 10 holdings. So if those companies do better than the rest of the S&P 500, all the holdings they have, you're going to get that slight difference where you get that 11.17% versus 11.01 versus 10.56. Overall, you can't go wrong. This is a great starter to be buying long term. So you choose. I have videos on all three of these. Go through my long-term investments. I break down FXAIX. I break down FNILX. VOO is an ETF version. So you have an index fund, you have an ETF, and then another index fund. So definitely check out my playlist for that. You can definitely get a lot of good information on seeing how much, how much value that these give you. All right, so my last goal is, I put my money in Citibank. What I do with this, it's an online savings account. It allows me to put money away and earn a higher percentage every single month based on, money that I'm not going to be using. So if it's like an emergency fund, I put it into Citibank. There's other options. You can use SoFi and make 4.6%. You can use Citibank and make 5.05%. The difference is some of them need a higher minimum balance. So you just have to take that into account when you're putting your money into it. You can just Google online savings accounts, and it's nice because you can earn more money, and you don't just have to go through Citibank or SoFi. They have Discover, where you can earn 4.35%, and there's no minimum deposit, versus the one I'm in at Citibank is you need a $5,000 minimum dollar deposit. So if you're saving for a house, this is a good thing to put it into because, just make sure it's FDIC insured, which they all are, the ones I'm showing you. And just know if it needs a minimum monthly deposit and is there any fees. So that's why I chose Citibank, because I'm not sponsored by them or anything, but I definitely give a shout out because I use them and I think that they've been working really well for me. And every time I get a paycheck, I transfer some money in there to help save. But at least you're earning more and you're fighting inflation because it keeps going up every year, it seems like. And it's good to have a little bit of extra cash. So $1,000 in there, 5%, you're earning an extra $50 on the year. An extra 100,000 in there, you'll earn an extra $5,000 on the year because you're making that 5%. So I use the online savings accounts, whether it's Barclays, Discover, Citibank, or SoFi, and that allows you to save some of your money, which helps you in the long run. You always want to try to find ways to maximize, your money. Don't just let it sit in a checking account not earning interest. All right, guys, this is the end of the video. If you're interested, I don't get any kickback for this. I use Fidelity. I just really enjoy them, so I definitely want to give a shout out to them. I have most of my accounts in here. You can open an account. It's very easy. You can just make a phone call. Their customer service is excellent. And, I have most of these accounts. I have a rollover IRA. I have a traditional IRA. I have a Roth IRA over time, I have a brokerage account. I have Fidelity Crypto, crypto trading through Fidelity as well. Now, I don't use the Fidelity Bloom, but I do have the Visa signature gift card. And, let me just show you one thing about them because I think that is very useful. So if you look at their Visa gift card, their Visa credit card. Let me just type that in real quick. What I like about it is, you get 2% cash back. There's no annual fee. But the real key for it is you can turn your points, you can make them go into your investment account. So every time that I hit the cap on it, the $2,500 and it gives me $50, it gets reinvested into my taxable brokerage account. So let me show you how much money I made or I got back and then reinvested into stocks. So I just want to show you because I use the Fidelity Visa card and it says I've earned over $829 over the past 12 months. So it depends what your expenses are, what you're spending your money on, but the points, every time I hit 2,500, it goes and it transfers automatically to my taxable brokerage account. So it's just an additional way to save. So this year in that brokerage account that's worth 26 grand, I add an extra $829 to buy of, index funds. So for me, it's another additional way to put some pennies away that you don't even realize you're doing. You're shopping at Costco, you're shopping wherever you got to go. You spend money on things you need, and then the money goes right into there. So I just wanted to, show you what I'm doing. This is my plan. This is how I do it. And hopefully you learned something. All right, guys, that's the end of my video. This is the channel Trading Simplified. And if you feel like you learned something, please like, subscribe, and hit that thumbs up. I really appreciate it. And I'll see you next year.